Hello, and thank you for joining us at xm.com for this Forex Preview video. I'm Cristina Marujos. Joining me today is Senior Investment Analyst Rafi Boyechian. We'll be looking at data out of the UK. Now, the UK's growth outlook hasn't been rather positive lately. However, data expected this week, GDP growth and industrial and manufacturing output are expected to rebound slightly in May. What is the general outlook for the UK's economy, given that we still have the Brexit uncertainty?
So we've got Brexit uncertainty. We also have trade tensions. All of that has been weighing on UK growth. Recent data has been somewhat distorted. We of course had that temporary boost back in March with firms front-loading their shipments ahead of a possible no-deal Brexit on the UK's original departure date of March 29th from the EU. In April, though, we saw a sharp reversal. We're expecting a partial recovery in May. Going ahead, though, the outlook is not looking very positive at the moment. The PMI indicators are all pointing downwards, and with the overall global growth picture deteriorating as well, a UK growth picture is not looking too bright just now.
Well, do you think the data released this week will determine the Bank of England's next move, and will it hinder its intention to raise interest rates?
Well, more and more analysts think that the Bank of England will be forced at some point to drop its tightening bias. At the moment, the Bank of England is one of the few central banks around the world that hasn't signaled looser monetary policy. So if we do get unexpected weakness in Wednesday's data out of the UK, that would only reinforce the view that the Bank of England will at some point be forced to change its stance and possibly even cut rates.
And where does all that leave the sterling? It's been under pressure lately. One would suspect that weaker data could make it plummet even further.
So that's why we've seen sterling already under pressure in recent weeks from growing signs that UK growth is suffering. And then more recently we had the resurgent US dollar on the back of the Fed perhaps not being as dovish as markets think it's going to be. So sterling is of course under a lot of pressure. It already broke below the 1.25 level. And then if the incoming data supports the argument for a rate cut by the Bank of England, we could see sterling slipping even further, perhaps possibly below the 1.24 level as well, and even go as low as 1.23.
I see. Rafi, thank you for joining me today.
Thank you.
And thank you for watching us at xm.com.